Good evening, everybody. I'm Pierre, AD Trader. It is April 20th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla is down $17.60. That's 9.75%, closed at 162.99. Post-market, we seem to be down by a further 8 cents. So let's look at what we have here on the chart. We were into this downward channel and we left it a little bit on Monday, and then we came right back into it on Tuesday. Yesterday, of course, we maintained ourselves here. We stayed above 176.73 yesterday, but today broke 176.73, broke 167.60, which was an important support in the past in 2022. It was an important support, and now we seem to have found support at 161.23. Yeah, we have a gap down, so this is not really good news. Look at the volume also, 210 million shares exchanged compared to basically 120, 130 on average for the past few weeks. Let's take a look at the 1 hour chart. So on the 1 hour chart, we see the gap down here. We were down on the first hour. Second hour was basically sideways, and then we just started to come down with a little bit of a move back up on the last hour with a weak volume. Let's come back on the daily chart. Let's look at our indicators. So stochastic at 5. The two lines of MACD are below 0 now. RSI took a plunge. Look at this at 33. It needs to be above 50 in order to have something bullish. And DMI, look at the red line of DMI, which is the line that indicates the bearishness in the stock. So the bearishness in the stock just shut right up. So what should we do here? So 167.60 was an important support, and I said yesterday that if we were going lower than that, then this would trigger another move down. This is triggered. It's still possible that we have a pullback. If you want to go short, I would use 176.73 as a stop loss right here. And as a profit target, we are looking at 140 to 135, depending on when we are going to reach this. If we pull back up and then respect the two resistance, it means that we could be having a target even lower at 130. Basically, I cannot give you a specific number for the target, but use this downward support right here. This is going to tell you what you need to do. And when it comes back here, you can take some profit here, and then it might just go back up and reach the other side of that resistance before maybe doing another move down. So that would be a second short opportunity. So basically, this is what I see for now. This is not financial advice. So let's take a look at some news. So we have Electric that mentioned the fact that Tesla stock crashed 7% today following earnings that actually met expectations. So yes, it met expectations. You can get the whole story if you listen to the earnings call. Elon mentioned things that were quite interesting in there. He said that they are monitoring the orders every single day. So they have the number of cars that were ordered every single day, and they match it up with the number of cars that they produce. And based on what they said, and they were not super clear about that, but we could understand that they are basically adjusting the prices in order to sell everything that they make. So there's definitely a weakening in demand. We saw Elon Musk drop prices, and he said that he wants to make his car the most affordable he can. So that sounds nice. But what I gathered yesterday is that there is a weakening in demand, and he basically said it so himself. He said, yes, of course, because of the interest rates, people are having a harder time making payments. But it was the first time that Elon admitted it, in my opinion. Maybe this is what scared people a little bit. I still think that Tesla is in a great position in terms of its margins compared to other automakers in terms of its debt and everything. But maybe people are starting to see that Tesla is not this unicorn, and they are also subject to the macroeconomic factor. And maybe it's not as much as a software as a service company yet, because the full self-driving is not there, and full self-driving is going to be tremendous when it comes. So maybe people are starting to get cold feet a little bit. And maybe after this macroeconomy thing that is going to happen, after inflation, after interest rates, then maybe Tesla at that point will be looked at with a different eye. I think that the earnings call was quite revealing, so I suggest that you take a listen to it. Basically, this is what Fred is mentioning here. Many Tesla fans were holding on to the idea that Tesla was reducing prices to start a price war and not because it needed to create demand. These results and the automakers' comments yesterday confirm what most people knew to be true. Tesla needed to reduce the price to create enough demand to match its production. Period. Tesla had an aura of being so different from the other automakers, but on that macroeconomic aspect, it is the same. So this is my take, but as I say all the time, the stock chart is going to veto every speculation I have. On a brighter note, Tesla has finally decided to bring its strip liner to its mobile, something that Tesla owners have been wanting for a long time. So then people are going to be able to plan a trip on their app. So I think this is great. Let's take a look at QQQ. So a bit of weakening for QQQ. It's down 0.76%. We have this selling pressure candle with a long wick at the top. It's not the most bullish candle, even though it's green. VIX is stabilizing. We are stabilizing above 1658, which is quite low. We have not been this low since January of last year. This is great. Dow Jones dropping down a little bit, still above 33,638. S&P 500 dropping a little bit, so we could be soon outside of this bullish, very steep trend. Nasdaq pulling back down a little bit. You still need to watch this support at 11,834. We are still quite a ways away from it. We still have a good stochastic at 69. Gold propping up a little bit. We like to see this at 1556. Silver creeping back up also. Silver stochastic at 75. That's good. Bitcoin has continued its drop, and since we don't have stochastic over 60, this is in free fall. If you lose stochastic over 60, stocks tend to go into a free fall. Yes, there are some exceptions. We had an exception right here. It stayed above support at 27,600 approximately. But here, this is a different thing. We are moving down and stochastic is below 60 and dropping also. This is a free fall thing. And we don't know, and nobody knows until where it is going to stop. But if you are trading Bitcoin, maybe it's the time to get out of it. Ripple, pretty much the same thing, even worse, because we even closed below 0.47, which is an important support. Bumps away here. And the dollar, US dollar, it's going sideways. Stochastic is maintaining itself quite well at 39. It's not super high, but it's maintaining itself. Well, thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.